Hey guys, welcome to another episode of UK Tax Free ISA. And today I'm going to talk to you about a stock that is very popular amongst people in the UK at the moment, particularly in your tax free ISA. And I can understand why. It's called MSTR, and it's pretty simple to understand why. If you look at the past year, it has gone up 584%. So that means, if you'd invested 1K, you now have 5.8K. So amazing returns in the past year. And a lot of people are putting a lot of money into this. And I can understand why, based on the returns. However, do people actually know what MicroStrategy is, what MicroStrategy do, and why they've suddenly exploded from a company worth almost nothing to a company valued at, well, according to their stocks, $92 billion? Well, first of all, let's look at the balance sheet. So as we can see, past year, 2023, total revenue, 500 million, with an operating profit of minus 115 million. Look at the last quarter. Again, total revenue, 116 million, operating profit, 432.58 million. So why is a company that's losing 438 million a quarter valued at 92 billion? Well, the reason it's valued at 92 billion is it has a very interesting way of doing business. And that way of doing business is with Bitcoin. So for those of you that don't know, Bitcoin has been on a massive rally in 2024. So it's rallied all the way up from, I think it started the year maybe at around $25,000, $30,000. No, actually lower than that, higher than that, sorry. Started at $43,000, all the way up past $100,000. And a year and a half ago, it was down at what, $16,000, $17,000. So a massive rally in the past year. Now, MSTR has a very interesting strategy in which it essentially buys and holds Bitcoin. So currently at the moment, MSTR or MicroStrategy hold Bitcoin that has a value of 42 billion. So they hold 423,650 Bitcoin. So if you times 423,650 by roughly 100K, that's $42.365 billion. So why is a company that holds that much valued so highly again? This is something people should think about. It has liabilities and assets of roughly 42 billion. It owes a few billion, but we can just discount that for now and say that it has assets of 42.6 billion. Now, 42.6 billion, but the company is trading with a market cap of 92 billion. It's really important to note that, really, really important to note. So this is a company that makes no money. This is a company that has a revenue of less than 500 million a year and has a PE ratio which is negative because they don't make any money. So obviously, they don't have any value. They don't have any assets really, apart from Bitcoin. Their balance sheet, if we look at their balance sheet on Trading 212, more financials, we can see total current assets, 267 million, and then they slow down. Liabilities, we've got a few billion of liabilities in here somewhere. There you go, 2.27 billion. So, but even if we ignore that and we say MicroStrategy or MSTR's general rule of thumb is buy Bitcoin, hold Bitcoin, because recently they've just bought some more Bitcoin, that gives them a company value of 42 billion. So they have holdings of 42 billion, but yet the company is trading at a market cap of 92 billion. So let's think about that for a second. 42 billion it holds in assets, well, less than that, but being generous, 40 billion, 42 billion. It has a market cap of 92 billion. That means anyone who buys MSTR is essentially paying more than double to a company that just holds Bitcoin, to what Bitcoin is worth. Why not buy it yourself? At least then you have $100,000 worth of Bitcoin. Here, You're buying into a company that holds Bitcoin, and that's it. And people are going to say, they've got other things going on, they've got a plan, they can cash out maybe and get realized profit, they can do other things. But the reality is, you are holding a company that, if you look at the balance sheet, has essentially assets of less than half of its market cap. And now you're going to say to me, okay, that's not how you value companies. That's true. You value companies on how they are going forward. You value companies on potential growth. You value companies on various metrics. But something that I would say is, why would you buy this? Why would you not just buy Bitcoin yourself? And another thing you might say to me is, you can't buy this in your tax-free ISA. You can't buy Bitcoin, so therefore you need to buy MSTR. The answer is no. MSTR is going to crash. Once Bitcoin crashes, which we know it will, it's done it before, it will do it again, it will always do it. And once it does, it will crash, and it will crash hard. And once it crashes hard, that's it. MSTR is going to come down as fast as it goes up. It's going to come down harder than Bitcoin because it holds less value than Bitcoin. So I just wanted to share that with you guys. I had a few questions about it, and I thought it'd be important to share. The other stock I want to talk to you about today is Tesla. So Tesla is another stock that has rocketed up recently, and it's up another nearly 5% on the day. So it's almost back at all-time highs. So all-time previous highs were, I think, maybe around 4 something, 403, 405. So currently we're at all-time highs for Tesla. Now, again, Tesla is a massively overhyped stock right now. Maybe you see value. Unlike MSTR, Tesla actually has potential. I'm going to say potential value going forward, because it does. It has, for those of you who haven't seen, it wants to launch driverless cars. It wants people to be able to buy a Tesla, and then while your Tesla isn't running, it can be going around and picking up other people when you're not using it and making you or Tesla money. So Tesla actually has ideas, and Tesla actually has a business. It does sell cars, it does do various things, and so unlike MSTR in that way, it does provide value and is a business. However, again, if we go down for Tesla and look at the market cap, so market cap of 1.35 trillion at the moment, 1.35 trillion. Let's just think about that for a second. This is bigger than any other car manufacturer. I think it might be 10 times bigger nearly than any other car manufacturer. Does it make the most cars? No. Therefore, a lot of this is just hype again. Now, if you believe the hype, if you think the hype's going to continue, that's great, buy it. But personally, I don't. I think that the valuation it's trading at by now is purely because of Elon, purely because Elon is Trump's sort of right-hand man. Trump's got into the presidency, and Elon is, starting this committee that they've talked about to reduce and cut costs within the government. Now, it has a P to E ratio, so price to earnings ratio of 105.74. And just to put that into perspective, if we look at the price to earnings ratio of any other tech company, let alone car company, if we assume Tesla's a tech company, let's look at Apple. PE ratio of 40. Let's look at Amazon. Price to earnings ratio of 48. Let's look at, Google. Price to earnings ratio of 25. All these companies have a much lower price to earning ratio. Tesla is over 100. Now, I believe Tesla is massively overvalued. I believe that the hype may continue for now. I believe that it could continue to go up. But before you buy Tesla, ask yourself, what is likely to happen? Okay, it might go up, maybe it makes new highs, maybe it keeps going up, so it's 420 now, maybe it gets to 430, 440, 450, who knows? But it will come crashing down. And when it does, it will crash hard, very hard. Just look at the previous timescale for Max, last 5 years. Look at the previous, say, what was it at in 2021? Nearly $400 a share. It came crashing all the way down to $113 a share. It then went up, down, up, down, up, down. There's one thing we know for sure: the harder Tesla pumps, the harder it will fall. And again, Let's go down. Let's look at the balance sheet. Let's look at the financial statements. Let's look at the stuff that actually long term will derive whether this company does well or not. So we look at quarterly results. We can see that revenue, last 4 quarters, has gone nowhere. Profit has gone down. Net income has gone down. Nothing has happened. Tesla's having a massive sale in the US at the moment of Model Ys and Model 3s because it can't shift its cars. They've been talking about turning these cars into self-driving for years now, and it's not happened. And people say to me, well, now Trump's in and Elon's going to be busy doing this other stuff. He's not going to have time to think about Tesla. So I would just say, be careful. Buy Tesla if you see value in it. But personally, I don't see value in it. Anyone that bought it 3 months ago, 4 months ago, congratulations. You saw something I didn't, and you've well earned that money. But all I would say is look at the risk to reward ratio. The reward may be 10%, 5% gain, but the downsides are massive. If it went all the way back down to, say, $200, $100 a share, we were looking at, 50% losses, 50, 60, 70% losses. You've always got to ask yourself the question, risk to reward. What is your risk to reward? So that's all I wanted to talk to you about today. Hopefully you found this video useful. It's probably going to create some controversy as well, but I don't mind that. I'm ready to chat to people. I'm just sharing my opinions and happy to admit if I'm wrong. I mean, I wouldn't have bought Tesla 3 months ago, and now look at me. So I wish I had. So I can't say that people are always right or that I'm always right. But thanks for listening, and catch you on the other side.